Alright, how's it going? I want to first start off by saying this is the first YouTube video slash presentation that I've ever made. It's not going to be perfect, and it's definitely not going to sound perfect. But if you watch it with me and make it through the whole thing, you'll probably learn a lot about candlesticks that you didn't already know. So I want to make this as simple as possible for new traders. I want to make it short and straight to the point. So let's get started. We're going to go from the most bullish candlestick to the least bullish candlestick, and the most bearish candlestick to the least bearish candlestick. These are just basic candlesticks. Our first candlestick here is a bullish engulfing candlestick. This is the most bullish candlestick you can find because it shows that the stock opened at the bottom and actually closed high of day. This candlestick is an igniting candlestick, as it could ignite the move. Okay, you can see the candlestick highlighted in yellow here. If you was to place it over the previous candlestick, it would fully engulf it and you would not be able to see that candlestick. You can use this candlesticks with trend lines, support and resistance, moving averages, other types of candlesticks, and it would add value to the price action of this candlestick. Alright, let me show you guys on a chart. Alright, if you was to add a basic trend line here and you connected this low to the other candlestick bodies, you would have a low here, you would have a higher low here on the trend line. The stock actually gapped up here, showing signs of strength. It pulled back to the trend line support, bounced, pulled back again to trend line support, and printed the bullish engulfing candlestick. Now you could have took entry here and you could have put a stop loss under the previous candlestick or trend line support, and days after that you would have made a lot of money. So something to look for. This is a very good candlestick to show that the move is being ignited. Alright, let's get back and go to the next candlestick. Okay, this is the second most bullish candlestick. This is the bullish pin bar. Some people like to call it the bullish hammer. Depending on the size of the body, I like to call this one the bullish pin bar. This shows that sellers came in, pushed the price all the way to the bottom. Buyers rejected that and said nope, and we're going to close it at the high of day. So this is a good continuation candlestick or a good reversal candlestick. Always look for these wicks as they show signs of rejection. As you can see here, the stock was in a slight downtrend. You got the big bullish pin bar here, the huge wick. The longer the wick, the more significant. This could also be manipulation, as it took out everyone else's stop loss, letting the big money get in for a cheaper price. After that, the stock continued upward for days. Always look for these wicks or tails. Next, we have a normal bullish candlestick. This is nothing more than a continuation candlestick. You will find these all the time in an uptrend. You can bet that the stock will continue higher if you see these candlesticks. Okay, so here you can actually see highlighted in yellow, that's the continuation candlestick. If you look at the candlestick previously, that is actually another bullish engulfing candlestick. It actually broke out of a resistance, showed the igniting of the move higher, and then you had the continuation, and then the stock just continued higher. It actually printed another bullish engulfing candlestick, which was huge, and after that the stock took off like a rocket. Next, we have a doji candlestick. This is a indecision candlestick. Anytime you see these at the top of an uptrend or at the bottom of a downtrend, this can signify a sign of reversal. Always be looking for these dojis, because if you're going upwards, you do not want to see indecision, because that means, hey, we could be turning around. Same for going downwards for the bears. If you're going down in a downtrend, you do not want to see indecision anytime. If we look at this stock, you can see that the stock was actually creating an uptrend. It fell off with a gap down, pulled back a little bit, based out, and printed the doji candlestick. You could have put a stop loss underneath that wick there, and then just off that one candlestick there, you would have never got stop lost, and you would have been in the money. Stock continued higher for days after. Okay, next we have the least bullish candlestick. This shows that the buyers, it actually opened at the very low of day. The buyers took it all the way to the top At one point this would have been a bullish engulfing candlestick, but the seller stepped in and said no. They rejected it, and it almost but not quite closed low of day. So a very small bottom body. Let's look at it on the chart. Okay, you can see that this stock come out of a rounded bottom, rallied up, huge volume, huge strength, and at the top started moving sideways. It printed a rejection candlestick. The huge wick shows you that the sellers are stepping up, buyers are losing control, short sellers are attacking, profit takers, you want to get out on this candlestick. If you're a bear, you want to get in, and then the stock just continued downwards. Nothing more than a rejection or a loss of strength. Okay, going to the bearish candlesticks. Unlike the bullish engulfing candlestick, this is the bearish engulfing candlestick. This is an igniting candlestick, just igniting the move downwards. So anytime you see this and you're a buyer, stay out. Okay, this is the weekly chart. You can see that the stock rallied up for 4 weeks in a row. Sellers said they've had enough. The bears stepped in. If you was to take this candlestick and put it over the previous candlestick, then it would have fully engulfed the green candlestick. This did nothing but ignite the move downward. So, very good candlestick to look for if you're a short seller. Alright, the second most bearish candlestick. This is the same thing, showing rejection. You got the long wick. The buyers drove the price all the way to the top, and the sellers came in and said no way, and they took it all the way to the bottom, closing at low of day. So this is the second most bearish candlestick, and this is a sign of huge strength for the bears. So let's take a look. Alright, if you was to look at this chart again, you can see that after the stock fell off after the bearish engulfing candlestick, that you printed these two tall wicks at the top, showing the buyers tried to step in and take control, and the sellers said no way, pushed the price all the way back down. So you had two of these almost back to back, and then you can better bet that this stock is done for. So never try to take entry on these candlesticks if you're a buyer. If you're a bear, then you can expect a continuation downwards. Alright, next, this is the normal bearish candlestick. This is nothing more than a bearish continuation candlestick. If you're in a downtrend and you see this and you're a bear, you can bet that the stock's probably going to continue heading downward. So if you're a bull, you do not want to be buying into this candlestick. Alright, let's look at it. On the left side of the chart, you can see that this stock was in an uptrend. It fell off, it bounced and made a lower high, and then after that it rallied downward and it just started printing bearish continuation candlesticks, and then the stock just moved downwards from there. I mean, you never want to buy into these candlesticks if you're a bull. Next, we have another doji candlestick. Like I said, this represents a reversal, indecision. Some people like to call these spinning tops. It depends on the size of the wicks. But the body is always near the center, and it is very small because the sellers and buyers are fighting and nobody can come to a decision. Alright, so if you look at this one, this is actually at the top of a run. So this is actually called a long-legged doji because it has very long legs or wicks and a very small body. So anytime you see this at the bottom or top, you can expect the move to reverse. Indecision, the body's very small, the price didn't move much from where it opened at. So either if you're in the profits, look for an exit, and if you are a bear here, look for an entry. Alright, next we have the least bearish candlestick. This is actually still a pin bar. If you see this at the bottom of a downtrend, you can expect a reversal because the bears pushed this price all the way down and the bulls came in and said nope, and they ate it all up and then pushed it near high of day. Not quite near high of day, but you get the point because it's very small body. The stock opened at the top and almost closed where it opened. So there's multiple types of these candlesticks that you can look for. Right here you see one. This is more like a hammer to me because the wick's not as long and the body is not as small, but still it's a little pin bar. So anytime you see this, you can take entry here, put a stop loss below the wick, and if the stock is in an uptrend or even in a downtrend and you think it's going to reverse with a low RSI, you could take entry here. When you take entry, you're only playing probabilities anyway. Nothing's 100%, so as long as you play the probability in your favor and put a good tight stop loss, then you're in the money. So this stock continued upwards. After you see this candlestick, if you look beside of it, it actually had a bullish engulfing candlestick, so you could use those together in conjunction with each other to represent that the stock should move higher. And what did it do? It rallied really high. So very good candlestick to look for. Alright, next I'm just showing pictures of some dojis here. You see that the stock had huge run-ups. It fell off. Dollar is very significant support here now. Anytime you see a doji after a huge downtrend or anything like that, you can bet that it's going to reverse, and you can see that it reversed here and shot up, pulled back to support again, bounced, pulled back to support, printed actually 4 or 5 of these little dojis, and then the stock just skyrocketed. So if you would have bought on trendline support at $1, this is a psychological level. You could have bought here, put a stop loss under $1. You would have never got stopped out, and just playing these dojis right here, you would have made over a 60-cent gain if you would have sold near the top. So very significant. Same here. You can see the stock was in a strong downtrend. It printed a little doji all by himself in yellow, and the stock rallied upwards. Could have made some good profit here if you would have put a stop loss right underneath the wick. Also another bullish engulfing candlestick to start the move. Alright, so that's it, and I thank you guys for watching me. If you like this video, give a thumbs up and subscribe. If you don't like it, that's fine too. Still subscribe and give a thumbs up. These videos will only continue to get better as I go and get more experience. Thank you for watching.